Hey everyone, welcome to This Explainer. Look, today we're going to completely transform how you interact with your money. Most people don't struggle financially because they're inherently bad at math. They struggle because they lack a clear, actionable plan. Figuring out a strategy from scratch can feel incredibly intimidating, but over the next 12 weeks, we're going to shift your financial life from absolute chaos to complete control. We're going to build a rock-solid system for wealth by diving deep into the psychology behind net worth. It's about understanding not just the numbers, but the everyday behaviors and mindsets that truly build wealth over time. Okay, let's dive into this. Over the next 90 days, we're following a chronological 4-phase roadmap. We'll assess your spend, automate your systems, grow that income, and finally, track your goals. Simple, right? Let's get to it.
Phase 1, assess and reduce your spend. The psychology of net worth really demands complete honesty. Before we can fix anything, we've got to confront our current financial reality head on. And hey, absolutely zero judgment here. We just need to completely reframe how we look at personal budgeting. I want you to think of your household like a local McDonald's franchise, preferably one where the ice cream machine actually works, right? But seriously, every successful business intimately knows its revenue, its expenses, and its net profit on a daily basis. You need to treat your personal finances the exact same way. Your income, that's your revenue. Your spending represents your expenses. And your savings, that is your net profit. So, here's your homework for week 1. It's time to gather the data. I want you to pull up your last 3 months of bank and credit card statements. You're going to categorize every single transaction into 3 buckets. First, fixed expenses, stuff like rent and utilities. Second, discretionary expenses, eating out, shopping. And third, debt payments, like those student loans. By the end of week 1, you just need to calculate your exact average monthly spend across those 3 specific categories.
Once you've got that data, week 2 is all about cutting the fat. The goal here is to reduce your total expenses by 10 to 30% over the next 90 days. We're looking for the lowest hanging fruit. Like, if you're dropping $225 a month on Ubers just because you're feeling a bit lazy on the weekends, try walking or taking transit instead. You could easily save $100 simply by comparing car insurance rates across different providers. Boom, trim another $100 from shopping or dining out. Cutting just $400 a month translates to $4,800 a year. And remember, psychologically, you are not depriving yourself here. You are literally just redirecting this money to your future self. All right, moving on to phase 2, automate, debt, and emergencies. During weeks 3 through 5, we are totally done relying on sheer willpower. We're leaning heavily into behavioral psychology now. Week 3 is all about embracing the concept of paying yourself first. The goal is to automate at least 10% of your take-home pay, route 5% to a high-yield savings account, one earning around 4% interest, and the other 5% straight to an investment account. Honestly, the psychological brilliance of this automation cannot be overstated. By having this money deducted before it even hits your checking account, you completely remove the friction of managing it. Out of sight, out of mind. If you don't see the money, you're just not going to be tempted to spend it. Then week 4 hits, and it is all about crushing high-interest consumer debt. Did you know the average credit card APR is over 21% today? It's crazy. But here's a strategy that actually works. If you have a $2,500 balance, paying just an extra $75 a month shaves 8 full months off your repayment timeline. Also, do this today. Take 5 minutes to call your credit card issuer. Tell them you're a loyal customer and ask to negotiate a lower interest rate. A lot of times, they'll temporarily drop your rate just to keep your business, and that can save you hundreds, if not thousands of dollars. Now, what's really interesting about this number 1,000 is its massive psychological weight. In week 5, your mission is to get your emergency fund to a solid $1,000. Crossing that 4-digit barrier in your bank account, it is a huge psychological win. It fundamentally shifts how you view your own financial security. Think about this. A shocking 59% of Americans cannot afford a $1,000 emergency expense. Hitting this milestone gives you incredible peace of mind and sets the absolute foundation for a positive net worth mindset. Phase 3, invest and grow your income. Okay, so with our defense locked in, we're shifting our entire strategy from financial defense to financial offense. Week 6 is all about setting up your investments. When we look at the data over the last 100 years, stocks have historically outpaced real estate and other commodities. We're talking average annual returns of 5.2% for stocks compared to real estate's 3%. To build true wealth, you absolutely have to concentrate your money into appreciating assets. For our 90-day reset, the strategy is remarkably simple. We passively invest in an S&P 500 ETF. That's simply a basket of the top 500 companies in the US stock market.
And this brilliantly illustrates exactly why we just set it and forget it. The sheer magic of compounding returns. Look at the math here. Over 30 years, assuming an 8% average return, automating a $1,000 monthly investment and never touching it mathematically grows to an astonishing $1.49 million. Consistency and just trusting the process are absolutely the keys to making this work. But listen, we can't just invest. We actually need fuel for those investments. So in week 7, we focus on growing your income. Cost cutting is a mathematical limit, right? You can only cut so much before you hit your basic living expenses. But your earning potential, that literally has a no ceiling. To grow your income, you can ask for a raise. Or honestly, job hop. That can sometimes score you a 30 to 40% salary bump. You could start a side hustle, like freelancing or flipping items, or you could invest in yourself and learn a high-income skill, like coding, sales, or design.
And that brings us to phase 4, track net worth and goals. These final weeks are designed entirely to lock in that wealthy mindset for your future. In week 8, we set our savings goals. But here's the catch. We don't just think about them, we write them down. Why? Well, a super fascinating psychology study revealed that you are 42% more likely to achieve your goals simply by writing them down, making a plan, and sharing them with a friend. The mere act of defining your goal and putting it out into the universe statistically supercharges your chances of success. Now, week 9 tackles a highly divisive topic in personal finance. Should you even use a credit card? Look, credit cards are a dangerous double-edged sword. Using them correctly requires some deep, intimate self-awareness about your own financial psychology and your daily habits. Let's break down the two completely distinct outcomes here. You've got the disciplined user. They run their purchases through the card, pay it off in full every single month, reap the cash back and travel perks, and effectively build the payment history that makes up 35% of their credit score. It's great. But the undisciplined user? Man, they get trapped by that 21% average APR. The credit card companies literally profit off these undisciplined users who currently carry a heavy average of $7,230 in credit card debt. If you lack self-control, and you've got to be honest with yourself, it is absolutely best to stay away entirely. Then in week 10, we start tracking the ultimate metric of financial health, your net worth. Calculating this is incredibly straightforward. It's simply your total assets, meaning everything you own, minus your total liabilities, which is everything you owe. So, for example, if you own a house worth $100,000 and have $25,000 in the bank, your assets total $125,000. If you owe $30,000 on a car loan, you just subtract that liability. Boom, your net worth is $95,000. Tracking this monthly or quarterly is a really fun, vital psychological tool that keeps you hyper-focused on your overall trajectory. But please remember this, your net worth is just a financial scorecard. It is definitely not a measure of your self-worth. For the final steps in weeks 11 and 12, you're going to review your spending from the past 2 months. We just want to make sure no old, bad habits have leaked back in. Then, look toward the horizon. You'll establish your 1, 5, and 10-year stretch goals. We're talking big, ambitious targets here, like buying a property or retiring early to build the life you actually want to live. Finally, you're going to open your calendar and schedule a recurring quarterly check-in to review your progress and ensure you stay absolutely consistent. This entire 12-week process is designed to shift your mindset and your habits permanently. Because wealth, it isn't built overnight. It's built through relentless consistency, discipline, and maintaining a long-term vision. So I'm going to leave you with a provocative question to carry with you. If you commit to this system today, what will your net worth look like in 90 days? Thanks so much for joining me on this explainer, and honestly, I cannot wait for you to take absolute control of your financial future.